Welcome to the Deep Dive, where we cut through the noise to bring you the essential insights. Today, we're tackling something that honestly can feel like a real maze for real estate investors.
Oh,
Finance.
definitely. The complexity, the paperwork,
Yeah.
it's a lot.
Yeah, the sheer time crunch involved, it's often a huge hurdle. Okay, so let's unpack this. We're diving into a company called Capital Flow Solution. They've got this pretty bold promise, making hard money easy for investors.
hmm
So our mission today is to really get under the hood, see how they actually aim to deliver on that. We'll look at what they offer, how they simplify things, all based on the materials we've gathered. It's not just what they do, but what it means for you, the listener.
And that's so important, right? Because understanding your financing options, whether you're just starting out or, trying to scale up a big portfolio, it's absolutely strategic. It's foundational.
Right.
So yeah, we'll dig into their specific loans, their whole process, and what really makes them different in this space.
Okay, let's start with the basics then. Who exactly is Capital Flow Solution?
Well, at its core, they're a real estate lender specializing in fast, flexible financing.
Mm-hmm.
Their main thing, like we said, is making hard money easy. Now, you and I know hard money usually means speed, maybe flexibility, but often comes with, let's say, complications.
Yeah, traditionally it implies speed, maybe asset-based lending outside of banks, but it often came with, let's be honest, a lot of friction, high rates sometimes, maybe opaque terms.
Right. So how are they making that easy? What's the real difference compared to other private lenders who also say they're fast?
That's the key question. Making it easy isn't just about being fast. It seems like they're trying to strip away that friction we just talked about, bringing maybe a more institutional kind of efficiency and clarity to this whole lending segment,
Okay.
which, has often been kind of fragmented, less standardized. So simplifying it like that, it's not just convenient, it actually changes the game for investors. It makes exploring deals and getting them done potentially much easier. That makes sense. And it looks like they've had some success putting this into Buchdust. I mean, they operate in 42 states nationwide.
Wow. Okay. 42 states.
Yeah, funded over $100 million in loans, and they're working with more than 500 investor clients.
That's pretty significant reach. $100 million across 42 states, 500 clients. That tells you something.
What does it tell you, though? Does operating in so many states make it harder to have that, crucial local market knowledge, or is their model built differently?
Well, that's a fair point. Usually broad coverage might mean a more, let's say, generic approach.
Yeah.
But hitting those numbers, over $100 million, 42 states, it suggests they've probably figured out a system.
A system.
Yeah, a system to understand different local rules, different property value drivers, from California to Texas. It suggests they've likely got tech and processes in place so their people can get up to speed on local conditions quickly.
Okay.
So it's not just one size fits all. That scale probably means efficiency that actually helps you, the investor, because they get your specific market.
All right, so that's the who and the how they're trying to be different. But, for investors listening, the big question is always, what can they actually do for me?
Exactly. The tools in the toolbox.
Right, and that's where their loan products come in. It looks like Capital Flow isn't a one-size-fits-all shop. They've got different loans for different strategies. Let's start with a classic, fix and flip loans.
The bread and butter for many.
Yeah, for those quick buy, renovate, sell deals. And their offering here looks pretty strong. They can cover up to 90% loan to cost or LTC.
Which is huge. That's 90% of the total project cost, purchase plus renovation.
And crucially, 100% of the rehab financing. What does that 100% rehab coverage really mean for an investor's capital?
Oh, that's a strategic game changer.
Seriously.
Rehab costs eat up so much cash.
Right.
By covering it all, Capital Flow basically de-risks that whole renovation phase for the investor. It frees up your capital. You can tackle bigger projects, maybe do multiple flips at once without tying up all your liquid cash. It's about leverage and staying agile.
Makes sense. And they give an example. A $320,000 fix and flip in Tampa, Florida, funded in just 13 days.
13 days.
Yeah, with that full 100% rehab covered. Moving that fast on a deal like that, that's a competitive edge right there.
Absolutely. Speed plus that full rehab funding. That means you can execute fast, minimize holding costs, and maybe even bid more competitively because, your financing is solid and covers the tricky part.
Okay, so fix and flip is one piece, but what about building from the ground up? They also offer ground-up construction loans. These are obviously bigger, longer projects.
Yeah.
How does that fit with the easy money idea?
Yeah, ground up is definitely more complex than a flip. Longer timelines, more moving parts.
Right. They mentioned phase draws. How does that work?
So phase draws are key for construction. Instead of getting all the loan money at once, it's released in stages, like as you hit certain construction milestones.
Oh, okay.
Foundation's poured, you get a draw. Framing's up, you get another draw. It helps manage cash flow, but it also lowers risk for everyone involved, ensures the project stays on track.
And it probably saves on interest too, right?
Exactly. You're only paying interest on the money you've actually drawn and used, not the whole loan amount sitting there from day one, so it's more efficient for the borrower too.
And they give an example here too, a $1.1 million ground-up project in Austin, Texas. A new 4-unit residential build using those phased draws.
Shows they handle larger, more complex deals.
Next up, bridge loans. The name kind of says it all, right? Short-term cash to bridge a gap. Maybe you need to buy something quickly before arranging long-term financing.
Exactly. Super useful for grabbing opportunities fast, especially those off-market deals.
Yeah, you mentioned off-market deals. Speed must be absolutely critical there.
Paramount. Off-market opportunities often demand incredibly fast closes, like days sometimes. Traditional banks just can't move that fast.
Right.
So a bridge loan, especially a quick one like Capital Flow seems to offer, lets you jump on those deals that might otherwise go to all-cash buyers. It's about having that quick strike capability.
And they've got an example. $580,000 bridge loan, Las Vegas, for an off-market duplex, funded in just 10 days.
10 days. See, that's the kind of speed that makes a real difference in competitive situations.
Okay, finally, let's talk about DSCR loans, debt service coverage ratio loans. These are specifically for rental properties.
Very popular these days.
And the key feature, and I think this is potentially huge for investors, eligibility is based on the property's income covering the mortgage payments, the net operating income,
Yes.
the DSCR.
Why is that so significant, especially if you're trying to build a rental portfolio?
This is where it gets really interesting for a lot of investors. The big deal with DSCR loans, typically, is that they don't require personal income verification.
No W-2s, no tax returns.
Generally, no. Think about it. If you're scaling up, maybe you're self-employed or have multiple LLCs, proving personal income the traditional way can be a massive headache for every single property.
Yeah, I can see that. DSCR loans often bypass that. They focus purely on the property. Does it generate enough income to cover the proposed mortgage payment? If yes, you're generally good to go. It simplifies things tremendously for portfolio builders.
Okay, so it takes your personal paperwork out of the equation, mostly.
Right. It lets you grow based on finding good deals that cash flow, not on how tidy your personal tax returns look that year.
And here's the example. $750,000 DSCR loan in Atlanta for a rental portfolio. And they explicitly state no income documents needed.
See, that's a direct benefit. It frees you, the investor, up to scale more predictably. The loan depends on the asset's performance. That's a big advantage.
Okay, so we've seen the different loan types. Let's pull back a bit. What does this all mean for you, the investor listening? Why choose Capital Flow? What's the overall advantage?
Right. Connecting the dots.
First, quick closings. We've mentioned the speed, 14 days average, sometimes faster. But beyond just getting it done, how does that speed help you compete?
It's a massive competitive edge.
Yeah.
In hot markets, sellers love offers with quick, certain closes. Sometimes that speed can even beat a slightly higher offer price that has financing contingencies dragging things out.
Ah, interesting.
Yeah, it means that you can be more aggressive, lock down deals, others can't. It increases your deal velocity, how many deals you can do in a year. It's not just speed. It's like market leverage.
Okay, market leverage. I like that. Then there's the flexible loan options. We saw they have different tools for different jobs, flip, rental, new build. How does that help strategically?
It avoids that square peg, round hole problem. Some lenders have maybe one or two main products, and they try to make your deal fit their loan.
Right.
Capital Flow, having specific loans for flips, rentals, construction.
Right.
It means you're more likely to get financing that's actually optimized for your specific strategy. Better terms, maybe lower risk, better alignment with your exit plan. It lets you diversify your approach without fighting your financing.
Makes sense. And the third point they emphasize is transparent support. What does that actually feel like in practice? They mentioned talking to real experts, a dedicated deal manager.
Yeah, this is about the human element, right?
Yeah.
Which can get lost sometimes.
Definitely. So does transparent support just mean they answer emails quickly, or is it more?
I think it implies more.
Yeah.
Having a dedicated deal manager who knows your deal from the start right through to funding, that's potentially huge. Real estate deals always have hiccups, right? Last-minute surprises.
Always.
Having one person who understands the context, who can help you navigate those issues instead of you getting bounced around a call center. That builds trust. It smooths out the bumps and reduces that, background stress level that comes with financing.
Okay, so that clarity and consistency is valuable. Now let's walk through how the process itself actually works. They pitch it as really straightforward. Step 1, submit your deal.
Mm.
Requirements seems minimal. Just send basic details about the property and your plan. Key benefit they highlight, no long forms needed initially.
And that initial low barrier is important. Like we said, it reduces the friction of just exploring a deal. You can vet more opportunities with less upfront hassle.
Right. Then, step 2, receive terms in 24 hours. You send the basics, and they promise a custom quote tailored to your deal within a day.
That speed on getting initial terms is crucial. You find a potential deal, you need to know quickly if the financing is viable, right? Waiting days for a quote can kill momentum or even cost you the deal. 24 hours keeps things moving.
Okay, step 3, simple underwriting. They say they don't ask for unnecessary documents, and you work with that dedicated deal manager we mentioned.
This is where they contrast themselves with maybe traditional bank underwriting, which can feel like an endless document request.
Yeah.
Simple implies they focus on what really matters for that specific loan type, like property cash flow for DSCR or the project plan for a flip.
Less digging into unrelated stuff.
Potentially, yeah.
Yeah.
More focused, more efficient. And having that single point person through underwriting should make it smoother.
And finally, step 4, close and fund. Average time frame, again, 14 days or less. Funds wired directly to title.
Clean and efficient. Direct wire to title is standard practice, but hitting that 14-day average consistently, that's the impressive part. It wraps up the whole easy promise.
All right, so beyond the process, let's hit some specific questions investors often have. FAQs, basically. Credit score. They recommend FICO 660 or higher.
Okay, 660. But they also say they evaluate each deal on its own strength.
Right. What does that usually mean in practice? Is 660 a hard floor?
Likely not a hard floor for every situation. It suggests they look at the whole picture, the deal's potential, maybe your experience level, the asset quality, not just the credit score number in isolation. A really strong deal might allow for some flexibility there.
Got it. What about the borrowing entity? Can you use an LLC?
Yes, they state all loans are made to business entities, including LLCs.
And why is that important for investors?
Liability protection mainly. Keeping your personal assets separate from your business debts. It's also often essential for scaling, treating your investing like a real business. So them lending to LLCs aligns with how serious investors operate.
Okay, and income verification, we touched on this, but just to be clear, for DSCR and fix and flip loans.
No tax returns, no W-2s required. That's what they say.
That seems like a major differentiator.
It really is, especially for investors whose income isn't easily documented on a W-2 or who just prefer that separation. It simplifies things dramatically.
What about beginners, first-time investors?
Good question. They explicitly say yes, they lend to first-time investors, helping people get started or scale up.
That's interesting. A lot of hard money or private lenders can be hesitant with first-timers.
Right. It suggests they're confident in their deal underwriting, maybe, looking more at the property and the plan rather than just a long track record. It definitely lowers the barrier to entry.
And out-of-state properties. If you live in one state, but the deal is somewhere else.
Also, yes, they confirm they finance in 42 states. So investing across state lines is possible.
So pulling it all together, over $100 in funded, 500-plus clients, 14 days average close, 42 states covered.
Yeah, when you look at those metrics, plus the specific loan types, the process they describe, the FAQs, it builds a pretty compelling picture. It suggests credibility and capability at scale. They seem to be executing on that, making hard money easy promise.
Okay, so let's recap the key takeaways from this deep dive. Capital Flow Solutions' core mission is simplifying real estate lending, taking hard money, and making it easier. They've got a range of loan products tailored for different strategies: fix and flip, ground-up construction, bridge loans, and those DSCR loans for rental.
Right, covering the main investor strategy.
Speed is a huge factor, that 14-day average closing time. And their approach seems very investor-focused. Things like no personal income verification for certain loans, lending to first-timers, and that transparent support with a dedicated manager.
Absolutely.
Yeah.
And understanding these kinds of options, fast, flexible, streamlined financing can be a real strategic advantage for you as an investor in today's market. It allows you to be more nimble, more competitive.
And their call to action is pretty direct. If you have a deal you're looking at, you can submit the scenario and expect to get custom terms back within 24 hours.
Quick feedback loop.
So here's a final thought to leave you with. if the process of getting this kind of fast, flexible financing, this hard money, really is becoming significantly simpler,
Mhm.
what new opportunities might that open up for you? How could it change the pace at which you or the market overall can grow?
That's a great question. Easier access to capital definitely changes the landscape.
Something to think about. Thanks for joining us on the deep dive.